Hi, this is Zach here with US Chartbreakers here at Zach's Traders Cafe for Wednesday, the 20th of March. Starting off with the S&P, which is rising so fast, it's almost difficult to fit it into the screen here. You can see that we bounced off that uptrend line there from back in October around the 51.30 level. We've still been looking for the 52.40, 52.50 area, which is the top of that formation, the red resistance line there from the end of September, and through 52.50, the best case scenario would be up to 5400 by the end of next month. On the downside, 50-60 really our favored support area if there's going to be one at all. We're going to retrace at all. Worst case is that we've got to test the 50-day line at currently around 5,000, but that does seem to be rather too pessimistic. Moving on to the Nasdaq 100, and here you can see that it's the same sort of thing as the S&P, re-establishing the uptrend line there from October. That's now just below what's 17,800. Above that, we're looking for the September resistance line projection, 18,700, and then the best case by the end of next month would be up to the 19,500 zone, which is the top of that rising October trend channel. On the downside, not expect anything worse than the 50-day line, 17,500, and that also ties in with the floor of that gap, the last gap there at the end of February. Moving on to the stocks, and starting off with a decent situation, Actinium. Here we've got the shares bouncing above a rising 50-day line. Initial resistance here around $9, so that's the initial target there from that line back in July last year. If we get through $9, then the next level up will probably be the line that I'm about to draw now, the towards the $12 area, basically the upper parallel of that resistance line there from July. But let's go for 9 first and see if we can hold above the floor of the gap there from the start of the week around $7. So 7, 9, and 12 really the levels there for Actinium. Moving along to critical metals, and here you can see there's been a classic bear trap there, the old support there from the end of February around the $9 level. Above $9 now we're looking for the next resistance on the way down, so towards $14. So hopefully a relatively straightforward setup there while we're above 9 looking for 14. Next up is a stock which we haven't looked at before, but hopefully it will be one which is regular here. We've got Enliven Therapeutics, and here the picture is the gap through a rising 50-day line. That was around the $15 level, and above $15 we're looking for $24, the top of that rising trend channel from last summer. The next situation, one to keep an eye on as well, one would think, given the setup, Envoy Medical. Here we've rebounded above the rising 50-day line, a bullish signal in its own right, and also bounced basically on the old $3.50 level, which was the old November resistance. That's now become the new support above $3.50. Looking for that resistance line projection from September towards $7.50 by the end of next month. Next situation is Fusion, and here you can see that we've had quite a move in the recent past. We're already in a rising trend channel there. That was basically giving us a target around $15, but we've gapped through that, and current situation obviously is a blowout move, but there is still the chance of heading towards that resistance line projection there from back in December, as high as $27 as a best case scenario target, but clearly up in the air literally on that situation. Moving along to Neurogene, which looks like a very decent setup. We've got a rising trend channel here above the 50-day moving average, and that's normally a decent sign. Top of the channel there, currently heading towards $55, and we're looking for that while we remain above recent broken resistance at 40. So above 40, rather simply looking for 55 on Neurogene. Another stock which is on the front foot at the moment is Primech, and here had a break of recent resistance through $3.30. Above that, looking at the top of that rising trend channel from back in October, as high as $4.70 by the end of this month. A new name again is coming up, Redwoods, and here very strange chart, very illiquid chart, but we can see that there is a possibility of a broadening triangle target there as high as $13.70, while we remain above recent resistance around the $11 mark. SCWorx is next, and you'll see why on the basis of the chart here. You can see that had an extended basing for the shares, gapped up and holding near the old resistance around $2.80. In fact, we're holding above it on pre-market. The target here up to $5.50 by the end of next month, the longer we stay above the $2.50 zone. On to the last three. The first one, a decent one. And here we've got Spire Global gapping through to new highs. Rising trend channel there from back at the end of October. Above the floor of the top of the gap there, $14.30. Looking for $21 as soon as the end of next month. Telomir is an interesting prospect at the moment, and you'll see why there. Because we've had a narrow bear trap rebound. That resistance line there currently around $7.50. That's the target we're looking for while we remain above recent support around the $5 mark. Finishing off in a decent way, we would say, Vincerx, and here rising trend channel again. The old resistance line target there at $5 now the new support, and we're looking as high as $10 or $11 by the end of next month, while we remain above the $5 area on Vincerx. That's it for me today. More updates tomorrow.